Recording is on.
Welcome to DXgov governance discussion for Wednesday, August 10th, 2022, 1500 UTC. Let's start first with the proposal roundup, or let's actually just share the screen for the agenda first. So yeah, we'll go over mainnet proposals, Gnosis Chain proposals, and then a couple discussion items, maybe to chat about some of the information on DXD ETH LPing, and then discussion that's been popping up at the forum around another 500K authorization for buybacks and what that kind of program could end up looking like. So starting first with the mainnet proposal roundup. As promised on last week's call, we once again still have Pudgy Rod NFT proposal that's in the queue, but we discussed it on last week's call. If there's any questions kind of on how that works, you can check out that. But the reason it's here on this call is because the proposal was boosted in the boosted state for 15 days because it uses the multi-call 2 scheme, which can interact with any arbitrary smart contract, but it is over a much longer period. So yeah, that proposal is set to go through in 2 days, and I think will be a first in terms of using the multi-call 2 scheme to send an NFT. And then next up, we have request compensation for Caret.eth purchase. So of course, Caret.eth is the ENS for Caret, and someone with all the DXDAO ENS domain names, someone has purchased it and then sent it to the DAO, and so this, I believe, is one of those proposals that has all of the information kind of on chain, right? So it's the address that purchased the token, and then the same address that sent it to DXDAO, and then that's also the address that's actually submitting the proposal here. I believe it's Geronimo, but it's one of those you can kind of check all on chain right here. And then the third one we have boosted is DXD buyback extension number 9. This also has a mirror proposal on Gnosis Chain if you want to vote for it or vote against it and don't want to pay the gas cost, even though, of course, they are reimbursed. But this is the one that, I guess, the one that matters primarily because it's the one that would send the 107 ETH. So this one is probably the least controversial of the discussion surrounding DXD over the last month or two. This one is just an extension of the previous buyback program parameters for the last 107 ETH that's in the buyback reserve. And so this proposal was submitted over the weekend. So hopefully by the beginning of next week, we are transferring that over to the GP relayer on Gnosis Chain to continue those purchases along the same parameters that all of the previous buybacks have been purchased. There are some other buyback related items coming up in a bit as it comes to the current status of the ones. There's a couple of proposals that we're dealing with now, and then also one of the discussion items later is the new proposal. But any discussion or comments, anything on the DXD buyback extension number 9? Awesome. And then we can switch to Gnosis Chain here. Actually, just quickly, so there are a bunch of the, I guess we call it summer cleaning scheme deregister proposals. And so these are submitted by Gusto. And we had talked about these in the forum before. These are basically just removing all the schemes that the DXDAO doesn't use here. And so there was just some discussion here about what these schemes were. We've already done the Gnosis Chain ones, but this is proposals to deregister these schemes you can see right here. And it does still include, as it kind of said here, the ENS public resolver scheme. And so this is one that is outside of the multi-call schemes that allows DXDAO to update the ENS over 3 days plus 1 day of boosting. So that's kind of a very valuable one because of that. And so these are proposals to deregister these here, and you can see them here. And like the multi-call 2 scheme, the scheme registrar scheme has a different length of time for proposals that deal with registering and deregistering. Of course, because registering schemes is a very risky thing to do, and so it will have extra eyes on that. And so yeah, this will be around for another 10 days, so always good to get as many eyes on it. And to verify, of course, what we want to be doing, you can see here, unregister the scheme. So we want to double check that the scheme that's unregistered here is the one that is laid out in this proposal here. And so you can see mainnet schemes to remove right there. Yeah, so any questions on that? As I said, the proposal will be up for 10 more days there. So definitely worth a look for everyone to double check.
We also have a trade proposal, right?
Ooh, I was looking for this.
Swap, well, it's here, swap 100 DAI to 100 USDT. I actually resubmitted this today to swap. I was feeling a bit generous, so I did 1,000 DAI to 1,000 USDC, just because we don't really have USDT in the treasury, so it doesn't make sense to trade to that. And the reason here is just to test the capabilities of the multi-call 2. There is, we're not 100% sure if it's actually able to do a token approval. There is some approval stuff in the contract, but we thought, we'd just try it out. If it doesn't work, nothing happens. If it does work, we simply trade 1,000 DAI to 1,000 USDC on the Curve pool. And I submitted the transaction, but gas has been really high, so that's the reason why it's not showing up yet. It's still in the mempool. And yeah, all the transaction does is the same as when we do a trade on Gnosis Chain. It does an approval of the exact amount to the DAI token, and then the second call is actually the trade on Curve. So with this, we'll see if we'll be able to actually also do trades directly from the treasury. Even if it does work, it's not really groundbreaking. As Chris mentioned, these proposals take like 2 days to boost, and I believe have a 14-day voting period. So anything outside of stables in Curve is really not an option. And even with stables, for example, we've been trying to acquire some liquidity, LUSD, and even that's like slightly off peg. So even in that scenario would be difficult. But it's just to explore the capabilities of the scheme, and hopefully that will be live today. And then I'll boost it once our gas is situation is slightly better. And I mean Ethereum gas, not global gas.
Yeah, I was saying, I thought the price of gas has come down. Thanks, Joe Biden. It's heading back up. Gas is expensive. Hasn't been this expensive in a couple weeks. Okay, so that's everything on mainnet there. Yeah, switching over to Gnosis Chain, there's actually a couple of proposals here that needs to be executed, but they have switched. So there's, but the ones that are currently live here, we have Milan V, DX Colombia contributor stipend request. And then we have Diego, DX Paris stipend here. We have Candy Fork worker proposal, June, July 2022. And then actually right here, maybe Dave, we could talk a little bit about this buyback order here.
Absolutely. So Chris putting me a little bit on the spot, as I have made a little bit of a error here, so to speak. So, well, rather than that precisely, is we have a set of parameters when we submit a buyback. One of which is the minimum amount of DXD we expect back in a trade, and this has always been a fixed amount. So it used to be 35, and we reduced it to 25 at some point last year, and due to a number of factors, which is both price volatility of ETH and DXD, of course, but in this case specifically that we measure or like quantify the amount of buyback we do by the amount of trading of DXD, which has been reducing significantly over the past weeks. We just approached the limits where we're just slightly below the 25. So currently this order is not able to be placed. This has already been adjusted for the DXD buyback submitted today. The past two are still also at 25. They are still like live, well, not live orders, but they are like orders that the relay is able to place. But we just have to kind of wait for a moment where either ETH goes up and DXD lags behind a bit. We're just on the border of 25, so I think we should still be able to place these potentially. But yeah, that's something that due to the decrease of trading volume, as we just need to reduce that one parameter in the buybacks.
Yeah, and then just the reason for this parameter is this is like a last this is a way to protect against like an ultimate manipulation where someone would manipulate the Swapr DXD ETH pool for a weird price so they could maybe get very little DXD back. And so it's kind of like an ultimate insurance policy that DXDAO does not put out an order that's not in line with the market there. And so, yeah, but as it kind of adjusts, and there's a lot of different things we need to do that. So, yeah, this proposal hopefully be on the fence of whether it will go through, but then the ones going forward will have a lower minimum amount. Okay, yeah, so then we have, yeah, as I said, there's the, that we're into pre-boost one. There's the DXD buyback extension number 9 mirror proposal. So again, this is just a mirror proposal of the one that's on mainnet. So express your support there. And then there is a signal proposal for DXDAO Discord rep boots Q2 2022. This is led by Keenan, I believe. Maybe he has it on here. Yes, Q1 of 2021. So that means this is the 6th quarter of rep boost, quarterly Discord rep boost by Keenan there. So yeah, that's not boosted yet, but once it is, feel free to express your support or disdain there by voting.
Yeah, and super quick, I just want to say it is technically behind in the sense that this should have been submitted some time ago. But due to the nature of the way that it's a snapshot and it's just a retroactive, if you are eligible, you can claim. The fact that it is being submitted about a month late isn't necessarily a problem. And everyone is, still as eligible as they were before.
Cool. Okay, and then, yeah, there's signal proposal for that. And then, yeah, we have the 2 proposals from Level K. First, Level K retrospective contributor bonus. This is for last September, a proposal that had passed. And then we have the Level K September and October proposals payout for that. This is 8 hours away from being boosted and was a topic for discussion last week on this call and also in the forum here. And yeah, I don't know if anyone has any thoughts on that proposal or any other proposal on Gnosis Chain right now. Cool. Well, then there's also another, I'm just seeing this is another buyback order from, I guess this is probably just submitted from Dave here, or no, this is this morning. This is the one he's going to do.
It is submitted. This one is down boosted, but I think DXgov doesn't show down stakes. So
okay.
I better go to Hat's Vault and submit the
I don't know if
down
that's,
stake.
yeah. Cool. All right. Moving on to discussion items. Number 1 is raise the DXD ETH LP on Swapr mainnet to 0.5%. And so this is just kind of a draft proposal that I had on something that's been kicking around for a while that I think is worth an experimentation there. And so this would be a proposal that would raise the swap fee on the DXD ETH pool on Swapr mainnet to 0.5%, up from the 0.25% there. Yeah, and so I mean, a couple kind of the basic reason for this is to make it more appealing to be an LP on Swapr for DXD token holders. So right now it's a pretty small amount of liquidity on all of the different chains, and I think part of that is because it's not necessarily financially advantageous because the price can be a little volatile. It's not very financially advantageous to be an LP on it. We had experimented with this with Gnosis Chain. In an effort led by Venki, the DXD ETH pool on Swapr on Gnosis Chain was raised to 0.6% in April there. And I think the conclusion of the results on that speak to or suggest that this is a good idea to continue to mainnet. And this is not completely exhaustive because, of course, this affects like market conditions by a lot. You can see here, this is I believe it's 110 days before and after April 14th, which is the day that the fee was changed. Because presumably, if you change the fee, what you could do is deter traders from trading as much because the fee will cut into whatever like kind of profits they have. And so maybe you have a decreased amount of volume, but there's a chance that that's made up because the fees itself are higher. And so there's a couple things to balance here, but I think at the end of the day, the most important thing for LPs would be to make sure that the fees that they would receive are actually higher there. And so, yeah, if you see here, you can see that over that time period, there was only a really small decrease in the amount of volume or market share that Swapr on Gnosis Chain had. It only went down 3.5% to 17.1%, despite a much larger increase in fee, and also the fact that the fee on Gnosis Chain was much more than Arbitrum and Mainnet, which suggests that some of the trading is a little bit sticky. And then if you look at the LP fees themselves, you can see why this trade-off is worth it. Basically, Gnosis Chain had almost as many LPs as Arbitrum, despite doing less than 50% of its volume there. And I should say that Gnosis Chain actually has a smaller amount of assets in it, so the APR for those is much higher. I'm not sure how. I guess if you compare the Mainnet and the Gnosis Chain one, and so Candy Fork has been a DXD ETH LP for a while, both on Mainnet and Gnosis Chain. And over this time period, I believe it's last 4.5 months, there's a 1.79% APR for the DXD ETH pool on Gnosis Chain, and then like a 1.29% APR for Mainnet. So it is like more advantageous to be an LP on Gnosis Chain. So yeah, I think this proposal would give some more incentives for LPs on Mainnet to be able to participate there. There's also the potential added benefit that it would actually give more fees in terms of the protocol fee, since Swapr is the design is that the protocol fee is a percentage of the overall swap fee. So right now, the fee receiver gets 10% of 0.025% swap fee, or sorry, 0.25% swap fee. But if this proposal was passed, then that would basically double the protocol fee for Swapr there and lead to some additional fees for the fee receiver. This proposal would, we can do this through the governance, and so the multi-call 3 scheme, which has, unlike the one that Dave was just talking about, which can interact with any smart contract. This one has, I believe it's a list of 6 contracts that it can interact with. And on that, it goes over 7 days plus 1 day to boost, just like the contribution reward scheme parameters. And so I believe I would check, this has been tested before, the Swapr fee set contract, but has not actually, I don't think we've used it in maybe over a year there. But that would actually be how it'd be implemented. And yeah, so obviously the raising the LP fee could discourage trading. It doesn't necessarily mean, even if the LPs are getting better return, it could lead to decreased liquidity of DXD. But given what's kind of happened on Gnosis Chain, and also I think the lower amounts of liquidity out there, I think it makes sense to consider this and to experiment with this, especially if you look at a lot of other projects when they are doing their LPing. A lot of them, smaller projects or projects that don't have a big already established liquidity, are raising the fees on their LP. So a lot of them are using Uniswap v3 pools that have like 1%, or even Balancer is popular here. So I think it kind of makes sense to consider this. Anyway, curious to hear what other thoughts. I believe there are a couple. One response in the forum here, but curious to see other thoughts on whether this is something to pursue. Maybe we should go a little bit. Maybe it could be less. Yeah, any thoughts?
Yeah, I really like this the analysis of fee setting, and like originally one of the main things that Swapr, DXgov Swapr was supposed to do is have the LPs set the fees to their different pools, and we always thought it would be best for the LPs who would have the best knowledge on how to set fees for their own pools by a governance. That was like one of the standout things about Swapr, which we've only been doing it on a here and there. But if all the LPs with their native tokens and things put a lot of analysis and thought into all of the pools, and there were more pools, obviously. It'd be really cool to see all of the different fee proposals and settings that the LPs would be doing for different strategies and stuff. And this was even before, Uniswap had like the 3 different buckets, but like this is, you can set the fee at whatever you want. And we've tried it in the past, but yeah, the end goal is lots of awesome pools on Swapr and the LPs doing really good analysis on how to optimize the fees. So the more we do it with changing them and experimenting is good to help other LPs as well. So I like the idea.
To comment on Ross's, this would be great. You could do it through the DXd LP tokens, right? I could even think, or Swapr token governance could also do this. Cool. Any other thoughts? Maybe leave it up for a couple of days. This would be something outside observers might find interesting, and maybe some additional angles we haven't seen. And then, yeah, we'll see if we can move this to an on-chain proposal if there's still interest for moving forward here. Yeah, and I think it's actually good to start trying these experiments so that like when Swapr token governance comes around, that kind of culture of let's try to adjust fees to adjust the fee rate to capture the most amount of value for LPs. I think that's a really valuable conversation that should be happening in the Swapr community. And I think by like testing it out and experimenting it, we're kind of like forcing that conversation there and preparing for when Swapr token governance can kind of like do this and lead that. More on that and another call later today. I feel like I need to like update the call as I get these updates in the chat here. Anyway, okay, so that's that proposal, and then the next discussion item is authorize 500K of DXd buybacks with new parameters. So this was another proposal I had put up I think 5 days ago, and part of a lot of discussions that we've been ongoing here. And so I just wanted to kind of go a little bit through the proposal and then kind of some of the conversation that's had, and then we can kind of pick up things from here. So I think, as most people know, and we've talked about, the structure of the existing buyback program is coming to an end because the ETH in the buyback reserve is going to be depleted after this next 107 ETH that was just approved in the extension number 9. After that is depleted, there won't be another way for the buyback program to continue. So this proposal is meant to find some way of driving some value or kind of coalescing that conversation around that. So there's a couple things here. The 3 things that it kind of says would do is authorize up to 500,000 of DXd to be purchased from the general treasury at less than 70% of NAV, as long as DXd is trading less than 70% of NAV, which we define more there. It keeps the same 25% of average daily trading volume, but adds another restriction of 3 times over 7 days. And then the 2 big changes when you think about here are to the circulating market cap and the NAV. And so this proposal, so this suggests basically once DXd is purchased from DXDAO and it goes into DXDAO's treasury, that should not necessarily decrease the circulating supply. And then, so that's kind of for circulating market cap, that will provide some changes there. And then the NAV here, the big change here is basically implementing 2 things. It's one, it's expanding the value of the treasury NAV to just include everything, but then it's subtracting the a certain amount of runway for the calculation of NAV. And so these are just the numbers that are kind of set in here. So you can see running through this, right, and this is a couple days late, 5 days. And so these prices maybe are not exactly right now, but you can just use it as an example in terms of like how this calculation would change going forward. So right now we would say there's a circulating supply of 38,655. And so the current way that we're calculating the NAV, DXd to ETH NAV for buyback purchases would put the NAV at like 17 million to 35 million. So that's, I don't know, 0.4 0.9% or something like that, 0.48%. And then the new Treasury NAV though would kind of adjust this a little bit. So it would have an initial higher total value, right, 37.5 million, because that includes basically Swapr, ENS, and GNO. And then it subtracts though 8.7 million, which is the calculation of using 2.5 years times runway, and the runway is being used here is 290,000, which I think is kind of what we've been running off of from the budget and expenses conversation. And so that means like the actual value of the treasury that would be calculated for NAV would be 28.8 million, down from the 35 million that's being used right now. And so that would yield a ratio of 59%, which means the buyback program would be that DXDAO would be able to purchase items because this 59% lower number is lower than 70% there. There was a bunch of great discussion, like kind of immediately and over the weekend. So there's Connor in here, Spicy Soup, John, and then there's a lot of things here. So I would catch up there, and so I maybe just try to summarize a little bit of where we're at here at the end, and we can kind of think about how things are going forward. So just to recap where we're at now. So there's 51 WETH in the GP relayer with the 2 buyback proposals currently in boosted or pending boosted. Now, as Dave just said, one of these buyback proposals is probably not going to go through because it has the wrong minimum amount. But that's kind of besides the point. And then if we look forward, the DXD buyback extension number 9 proposal, which would extend by 107 ETH, we just discussed that's live on Mainnet, and that would pass in just over 5 days. And so you can see that depending on the price of ETH and DXD volume, this could take around 20 orders to get through this 107 ETH and the 51 ETH here, because the order size now is around, I think, around 7 ETH, which of course changes with the price of ETH going up, and then also adjusts if DXD volume doesn't go up as much. But I'd guess that'd be around like maybe 20 orders. And so at the end of that 20 orders is when there needs to be kind of some resolution going forward. So I think it'd be a great idea to make sure we're trying to submit a proposal before the end of the week. The proposal was designed to basically use these 2 different levers to try to get to a consensus solution. We're trying to like manage and kind of capture what we're trying to use here. And so the first one is like circulating supply. And then the second one is treasury NAV. And I think there are lots of different ways to kind of tweak and calculate that, but that's what I think are most of the like kind of tools there. And so in the discussion above regarding circulating supply, Connor originally suggested that repurchase DXD not count towards circulating supply. That was the reason that was kind of included in the proposal, while John rightly points out that this DXD would be in the general treasury, where there's lots of other DXD that has both been vested to DXDAO from the original vesting contract, but also has also been purchased by DXDAO. There's lots of that DXD that's in the general treasury that is not counted towards circulating supply. So maybe that would create some inconsistencies there. And then additionally, Spicy Soup and Connor suggested not counting the DXD that is vesting. And so for any DXD that has been issued to contributors, we want to make sure we're accounting for this in terms of the DXD issuance. But that DXD issuance does not actually hit the market for 1 to 3 years, because the way compensation DXDAO works, right, is the DXD is vested for 3 years with a 1 year beginning to release linearly at 1 year there. So Connor would suggest that the DXD that has actually not been on the market or is still vested would not count towards the circulating supply. And again, like just to kind of bear things out here, right? A higher circulating supply means a higher circulating supply to NAV here. And so there's like obviously incentives to kind of try to decrease the circulating supply there. But that's kind of, I think, where the discussion is at there. And then the treasury NAV calculation, right? There's two kind of reasons to think about this. As I said, this does include like Swapr and ENS. And I think John made, a correct point too, that it's not like Swapr has a market price, right? Or that's anything close to what like ETH is in terms of like the value of the treasury. But just to kind of the reason I maybe included it was not so much that I thought it would really affect things, right? I think Swapr in the treasury is only like 1.5 million or something like that. But in the event that Swapr token did 2x or 3x, I think it can be reasonable to expect DXD holders to partake in some of that upside. And in the case, again, that Swapr price did increase a bunch, that would presumably mean good things for Runway. And so since I don't think it affects the treasury calculation that much, I think it's important that DXD holders have some upside in Swapr's success, especially considering right now it's the only revenue source for DXDAO at the moment. And I think this also applies to DX Ventures in investment when there is not a clear value translated back to DXD holders. And so I think there is and I think as I said up here, it's an increase of basically $2.5 million to the total treasury amount, which is before you take out, 2.5 million. It's an increase of 2.5 million to the total treasury amount before you would take out the Runway amount. But that's the reason I included it there, was basically to give DXD holders upside in both Swapr and like any DX Ventures investment. And then the Runway calculations, again, this is a number I think we can like play with, both the 2.5 years and the 290K. Those are just ways of kind of carving out like things for product development, I think that structure is kind of broadly supported. And so I landed the 290K, I think, is what we've landed at there. And then the 2.5 years was something suggested. And I think that could also open for discussion. And then it didn't seem like there was much discussion in the forum as much about the 70% figure. I think in an ideal world, it would be better for DXDAO governance to come up with adjusting the levers using the treasury calculation and the circulating supply in order to basically kind of maintain the 70% figure, just because that is what I think DXDAO committed to going forward. And like we talked about in that proposal that says 70%, the next line, or actually in the same sentence, said it needed to account for budget and Runway there. So I think this would very much be aligning with the spirit of that proposal. And then there's just some smaller things to be adjusted, and I promise I'll stop speaking in just a minute. The 500K authorization amount is actually less than it's been in the past for $1 million. But I think given the huge decline in DXD volume, this kind of makes sense. And I also think the 500K authorization amount is an important thing for structuring this program, because this isn't like going to lead to some death spiral where DXDAO is spending millions of dollars like purchasing DXD as people redeem. Like, this is very much a short-term fix with a defined amount. And I think it's meant to signal alignment and drive value to DXD. And I also think there's a benefit, I think Hedgehog said this originally, there's a benefit to governance like reauthorizing this, because it forces a conversation on the program. So I think that's there. And then again, I think about the 3 orders over 7 days, just because I think that's more reflecting the way the market has been kind of reacting over the last couple of months in this bear market as opposed to 2021. But again, just kind of something that's in the proposal. And then lastly, given the new destruction of this, I'm not sure it makes sense to commit to a long-term program. I do think whatever is decided here and whatever kind of comes up with this proposal will set some type of precedent should this need to be continued in the future. So that's why I think it is important to think about this in terms of long-term implications. But I don't know if we want to like get into committing to something like long-term. But I think it's important, kind of as we do with extension number 8, to like signal some things in the proposal that help guide the future discussions we are to have, and whether that's around the DXD token working group or also just kind of capturing whatever the future commitments be. I think we can probably put some of that into the proposal there. Anyway, okay, I just talked for a long time. Questions, more comments, suggestions, discussion points, anyone?
So I think one reason this is more significant than, say, the last one from like a precedent standpoint is this is the first proposal where we've depleted the like buyback reserve, the 2,500 ETH that's sitting in the bonding curve, because I think that amount, right? I don't think it was hard to argue against using that for buyback, since it was literally in something called the buyback reserve. Now, beyond that, though, I think it becomes more of a question of like, how much of the treasury should be directed towards DXD. So I do like, I kind of get that this is only 500K, and there's plans to have like a working group and talk about it more. But But I do think there is maybe some weight, especially when you have people already kind of pointing to the last one with like the 70% NAV and saying stuff like Fed speak and whatnot. But so I think there is, that makes me think that there is some significance to this. Like this will get pointed to in the future. But yeah.
I have 2 points to touch on. First, we're a DAO and we're about decentralization. So one of the metrics we should be following is the distribution of the token, like the number of holders. Of course, there's no way to know whether those are unique addresses or the same person with multiple addresses, but still, we need to be monitoring for diversification. And so one of the points of conducting the buyback is to support the token. And supporting the token is giving new investors confidence, like existing ones to keep holding and new ones to buy in. And so from the beginning of the buyback up until now, we should look at addresses on chain and see whether they have increased, remained relatively the same, or decreased. And if they remained the same or even decreased, that's not a positive outlook for the continuation of it until something else changes to improve the situation. And the second point I want to touch on, I'm grateful for Chris and John for kind of like voicing their opinion. Again, we're a DAO. More of us should voice their opinion. If they don't know what's happening, they should learn about it, and they should voice their opinion, because it's weird when like we have this organization, but the forum post is just of a couple of people chatting between themselves. So it's like when Chris or John is voicing their opinion, it kind of feels like it's the opinion of the DAO, but we don't know whether that's the truth unless someone else from the DAO speaks as well. So it's like one person from the DAO against one investor, and that's a weird dynamic. So we need more people from both sides voicing their opinion, like more investors and more contributors.
Yeah. I mean, I think just discussion, right? That's the core of what we're trying to do here. It's not so much that someone has an idea that's going to be perfect and we need to find that person an idea. Like, I think we all buy into this because this discussion and idea swapping and voting and people saying what they believe, that ends up producing like the best results. And so it really is the process. Yeah, and I think just comment on Nathan's DXD comment. Yeah, I think it's DXD has not increased its token holder set that much. If you look at Mainnet, it's somewhere like 1,500 DXD holders. I think that is surely not related to the buyback program or whether it would continue. I think that's more of just like how typically you have your biggest holder set at first, and then it's harder to recruit new token holders. So I'm not sure in an alternative world where there's like no buyback, or if that would actually increase the DXD token holder set. But I definitely agree it's like something we want to think about. And I actually think proposal that I did not a draft proposal that's in the forum, which I think is also like important to helping this, is like DXD liquidity. Because people are not really willing to buy DXD because it doesn't have enough liquidity on chain. And I think that's preventing some of that. So I think to me, that would be a way of addressing the DXD holder one more than the buyback one, because I'm not sure if that's directly related with the number of addresses.
There's a lot of technical details here, right? Like on how to calculate those sides of the equations. And I mean, I think those are worth looking at, but maybe since we are all here on the governance call, maybe it's more important to talk about like kind of just back up, like what is like what are the high level goals here? Like, I think it's clear to me that it's the main thing is like trying to like give DXD holders part of the appreciation of the treasury, because it's like gone up a lot since the ETH was raised, right? Even with the market downturn, ETH is still, 7 times what it was like when most of it was raised. So I think it makes sense for, like from that perspective. But I think it's maybe we should talk a little bit more about like, yeah, like what else do we want out of it, right? Like.
I mean, I guess from my view, in an ideal world, right? Like we would continue doing DXD buybacks based off of DXDAO revenue, right? Kind of like to redistribute those to the DXD holders, right? Because I guess the whole idea of the DXD holders is, well, initially I guess they funded the DAO of the funds, right? And then I guess the idea was that DXD having this like 2 token model, rep is like more the like voting shares, and DXD is more the financial part. And yeah, I think it's a difficult situation. In the meantime, of course, we don't really generate much revenue at all right now, especially not profits. If you take out costs, there's nothing, right? So I think it's like overlapping, like finding a solution to overlap that period, right, until we are able to deliver like a profitable return, whether that is through dividends. Just how you do it is irrelevant, right? You could just like send out dividends, or you could just buy back DXD. Both should have a similar function, but yeah, that's kind of my point of view right now. And I think buybacks have been addressing that up to now. Of course, as John mentioned, of course, the funds used were from the buyback reserve, so that does make sense. And I understand that this is different, but yeah, also interested to hear what other people think, right? And I mean, I think all of the DXDAO contributors also have a lot of DXD that's being vested through worker proposals, right? So I think ultimately the goals are very aligned from each side, right? Like the DAO itself holds a ton of DXD, workers are getting compensation in DXD, and investors, of course, also have an interest in DXD value rising. Perhaps the timelines or how quick people want something to happen might be different, but I think long term the views are very aligned. And yeah, it's it's just finding a good solution that everyone is happy with, I guess.
I think like sustainability of it is like worth talking about, right? And that's kind of one of the reasons I was like focusing on the NAV thing. Not that it's necessarily gonna the death spiral, but I think it's like, I think it is important to think about the sustainability. Like how long is this gonna last? Like what rate of spend will this like incur? And because yeah, and then I think we could, like you said, Dave, frame it towards like a trend. Like this is like sort of giving the appreciation of the treasury back with the aim of transitioning into a more sustainable situation where actually fees are sustaining it, right?
Other thoughts? I'm not going to call on people, but I kind of want to. Just know I may be looking at your tile.
Well, like, okay, I'll ask a question. Like, do we have an idea of how long, like at this rate, like this would, like we could do this?
Yeah, I mean, I think 500K would be probably around 200 ETH, and depending on the average daily trading volume of that, presumably that's 30 to 40 orders. If we do that over 3 orders over 7 days, as the proposal says, then that would be 10 weeks that these could be purchased, and that would be after the 150 ETH in that's still being used in the buyback reserve would be depleted, and that's probably another 20 days. And so yeah, I think like 13 or 14 weeks, I think would be a reasonable expectation for the 500K authorization.
So it's like 3 months. So this is like a 3 months of buybacks essentially.
So
like that.
Like the average daily chart goes up,
Yeah.
different things, but yeah.
Yeah. So the rate of spending on the buybacks responds to the trading volume. Is that how this works?
Yeah, it's a 25% of average daily trading volume. So that was like 40K, 45K, like 6, 7, 8 months ago. And then that is now like 12K, 11, 12K. So these purchases are actually pretty small. And I think, again, that like fits in with like the overall market where things are kind of at. And I think like smaller purchases spaced out and kind of like taking our time with this, I think makes like sense for all of the kind of reasons you said. And I think I actually don't think it will take that much to like inspire faith in the market here, just because DXgov still has that treasury to kind of inspire confidence too. It's just showing some commitment to that. But yeah, I think, 3 months. And this is a quarter, and I think that would be with you if the 3 days, the 3 orders over 7 days, which is about what we've done like the last 2 months, kind of as the market slowed down a little bit. That's just kind of the cadence that we've fallen into.
Yeah, and maybe it can seem tedious, but I do like to think about like edge cases, right? Like, so like what happens if like trading volume goes up? Like, does this mean that the spending goes from 2 million a year to like, could it go away? Is there a limit to how high it could go? Like, yeah.
Well, I don't think that the trading volume wouldn't affect this. I guess the spend, you're talking about the actual purchase size.
Well, or just the amount that is going into buybacks, which I guess
that's the 500K top line number, right? So that's kind of there, and that of course would be stopped. It would presumably be sent in the amount of ETH when it would be transferred. So it would would need to be, of course, another proposal to authorize any more than that. Since we use a 3-month average daily trading volume, it's actually going to be pretty difficult to increase the volume because you have like the last, even if you have a really banger month for DXD volume, you're still going to have the last 2 months there of like you have to overcome the average of that and increase it. So I think it'd be like pretty hard to see, much larger orders there. And again, there'd be the 500K limit there already instituted.
Well, yeah, for this particular proposal, I'm just thinking of this through a lens of like, will this be setting some precedent, and like, is it a sustainable precedent?
Yeah, and that's why I think it happens more with, and sorry, there's a U.S. history tangent. I think it happens more when people talk about like the Constitution and what people were thinking about then. But I think it could be applied to like lots of things in terms of like laws and legislation. It's really important that the conversation that's happening at the time the legislation or law is implemented is like included in part of the context, right? So like in 2 months or 3 months or 4 months, whenever we'd be like revisiting this, like what we're discussing now and the parameters we're discussing now should definitely be part of that conversation. And also that's why I think it's important to put things into a proposal that kind of commit oneself to the future, but allow some like flexibility there.
So you'd say that like we do have flexibility to change things like the rate and the NAV target and stuff, even if this passes.
I mean, yeah, I think I think in general, and this is where I think you get into the Fed speak thing, and I don't think that's actually a bad way of putting it, because you're just trying to communicate how this. I mean, like Jay Powell is basically trying to communicate how this like room of 12, I think they're all dudes, like think about the economy. Because they make all of these really important decisions, and it's important to communicate like how they're thinking about those things in order to do that. And so that part of the communication, even if it's like not clear exactly, I think is very important. And so I think there are things like, what are the things that DXD holders will be able to like understand and adjust? And so I think the way that this is like structured now, this 70% number to me feels a little bit more solidified in a way that, I mean, I think you could adjust it, but that one just seems, I think because there's partially been like less discussion about it, that one seems harder to adjust. But then like the runway and then the treasury calculation, I think the runway calculation is the big one that you could change. I think that one is like, and I think it's kind of like worded in the proposal that that's just kind of based upon what things are at. I think the 70% one, maybe we could put something in there that one should also be adjusted. But I can just see how that's something that people like to cling on to.
Yeah, I think it's good to kind of clarify these things so that it doesn't become this like argument later of like, well, you said like the DAO already committed to this, like because it has it in this past proposal. But yeah.
Yeah. Zet, Sky, Keenan. Maybe we'll call on people. I don't know if there's any.
Yeah, for me, I mean, I talk a lot too, but for me, the extreme. Okay, in general, my opinion is always the extremes, like not doing it at all and doing it in massive size is also not. So there's like some balance. This seems like a balance of in the middle. And then, as I've always said, like governance 2.0 is important in this because as once DXD holders and rep holders, together have this governance, then they really get to decide the future of the DAO and including DXD price. And so doing some mechanism to continue along the lines of what we've done, but this is with the actual treasury as well. If DXD is cheap, like I guess in general, it makes sense for DXDAO itself to just buy really cheap DXD, as long as it's not necessarily affecting the potential runway to build what it wants to build. However, like it moves towards all of those DAOs out there where a lot of those DAOs have only their native token and they actually build with their native token. There's benefits and negatives to that as well. So it's not, we're in a balance where it's okay to have our native token. A DAO can leverage its native token to do lots of things in the future. So it's not like we're trading one asset for another. We're not getting rid of assets, right? We're just adjusting. Well, we're actually adjusting a different way than most DAOs and organizations out there are doing. They're mainly going the other way. Well, and into dollars too, which we already have some dollars, and now we're balancing between ETH and DXD more, which we already have DXD too. But yeah, we're not like if DXDAO is successful, like its DXD can be used for things in the future at hopefully much better valuations as well. So it's not like we're not digging ourselves into like a hole in any way that I can see. So yeah, I think there's a balanced approach makes sense in general.
And just for the recording sake, shared some thoughts in the chat. Agree with Sky for sure. And I think talking about like this working group tokenomics, the future of DXD over the next coming months will be interesting to have this kind of built in an automated way. I think would be something to pay attention to. But just some thoughts there in the chat.
And I stand corrected. There seems to be.
Sorry.
I was like, I'm looking at all of them. I was going to eat. There's Loretta Mester in Cleveland, Esther George in Kansas City, Susan Collins for Boston. These are all Federal Reserve governors. Susan Collins just came in July 1st. And then Lyle Brainerd, who's actually was a potential nominee for Treasury. So that's like 6. So I definitely stand corrected that the Federal Reserve has a significant share of female board governors.
That is much better than the crypto space.
Right, yeah. But Kansas City, you don't need your own branch for Federal Reserve. And if you get that, then St. Louis shouldn't have theirs. That's just...
The original Federal Reserve was in Denver, right?
So, well, now we're getting up to the...
Well, now, I got this story from Chris when we were in Denver together.
It was the mint there. So the Federal Reserve is like a bunch of banks, like, because we didn't want to have one central bank, right? So there's all these like different ones that make it up. 1913, the amendment to the Constitution established it.
Yeah, Carson City minting. But to Keenan's point is one thing we could do is like we have a fee receiver for Swapr, and this is actually like receiving fees. So if we wanted to demonstrate how that goes back to DXD, like stuff could be built to do that.
So I think on mainnet that actually already works. Like there's the fee receiver for Swapr actually, I think Gusto set it up where it automatically goes to the buyback reserve. It hasn't, I think it was called like,
oh, that's right. Yeah. I mean, it
first week
goes
or two, but it hasn't, like it could do that, I think.
Yeah, no, that's right. It goes to the bonding. Oh, but then we're not really, that's sort of broken in a way. So not really broken, but it's not buying anything back. So yeah.
Thank you, Candelian. We needed that. Again, the Denver and the different, yeah, Kansas City. Kansas City, I believe it's the St. Louis Fed that has like a bunch of great research. They're the ones that you always use their data online. Yeah. Okay. Yeah, a lot still to discuss. I think we still have, as I said, I'm hoping to like submit something by the end of next week on this. I think there's some time to discuss, maybe have something next governance discussion a little bit more ironed out or the specifics there. And then, yeah, we can hopefully move to a proposal after that. Sorry, Dave. I mean, like, I'm like an all equal opportunity person. I want to like tell Solana people that like I try their stuff, you know. I've got Frame on there too. You can see that. Isn't that something? And Klepter. That's the Cosmos wallet. Where's Geronimo? Like, I mean, I give love to all.
Weekly reminder to install Frame if you haven't already. Game changer, man.
I'm in on the Frame train, but I'm like, and I think I'm okay with it. But I'm not as like gung ho as everyone else because it feels like it's still missing a little bit. But I definitely think it's a upgrade.
I guess my question is just how do you use your signers if you're not using Frame? Like it's just hell for me. Like even connecting through MetaMask is like impossible with my ledger.
Yeah, it used different times. It's gone up and down. Like I remember whole times the MetaMask ledger just did not work at all. And I think I've been having problems because I was always working through like Firefox, and I think that's the reason. Like the reason I like Frame actually is because I can more easily switch between browsers if the browsers are causing me trouble. Okay, well, we are past the top of the hour, so I will stop things there, stop sharing my screen so you get a full size of me here. But yeah, thanks everyone for joining. Yeah, and we'll see you next week.
Thanks, Chris.